Hey, hello everybody. This is Adam Adams. Now, if you don't know, he's a multifamily investor and he has partnered in over 7 multifamily syndications, 1,400 doors valued over $100 million. And today he's going to share his expertise with us. And so last week we did part 1 and part 2, and we talked about the beginner stages. And now we're actually just going to dig in on taking action. And the first action we want to talk about, how do you partner with investors? And now, Adam, I remember on our last call, you had mentioned that you believe that as beginner investors, we should really focus on joint ventureship. So can you explain really what is that and how does it really benefit us beginner investors?
Yeah, great. Well, let's talk about how it benefits your passive investor first, and then we'll
Okay.
talk about how it benefits you.
Okay.
Well, if your passive investor has money with you, and they're more likely to have the money is going to be safe and secure, and because you have somebody experienced on the team, somebody who's been there before, somebody who's bought one, who's already managed one, who's already sold one, they did well on it. If you have someone like that on your team as you're syndicating a deal, then your passive investor is safer. And I always say if your passive investor is in a good spot, that means that you're in a good spot. So it benefits you because you know that you're doing the right thing. You know that you're helping other people. Uh, Others have decided that they want to do the blind leading the blind. I'm completely brand new. I want to take on a new thing that I've never ever done, and I want to raise other people's money to do it. And then all of a sudden they go in and they buy this project, and then they lose a bunch of money, and the passive investor loses money, and that operator, that new operator, the blind leading the blind operator, uh, loses credibility forever. They didn't feel like they were a bad person. They never felt like they would cheat anybody. They never felt like they were going to do wrong. They always had good intentions, but they made mistakes because they had never had the experience before. And now nobody will ever trust them again. People will talk badly about them. They won't be able to raise more money. They won't be able to close more deals. So it's very, very important that when we decide to get into a business like syndicating apartment communities, that we think of the passive investor first. The more value we can add to that passive investor, the better it's going to be for you, the operator.
Okay. And then, so how, now that we focus on them, so in what ways will it benefit us as well, since we're beginner investors?
Yeah. So mostly what I just said, mostly the fact that this is a 30-year business, not a 1-year business. And if it was a 1-year business, it wouldn't matter. You could just do one deal, make a bunch of money, and screw your passive investors, and they lose money, and you never get to do another deal. Or you can do a deal safely and make it strong and make it good for passive investors. And now you gain credibility, you gain a track record, you gain confidence, you gain knowledge, you gain experience, which will allow you to go to the next level. You don't always have to JV with somebody, but the first deal or two, you absolutely should JV with with a team that's been doing it for a while. So that's how I think it'll mostly benefit you. It protects your passive investor, and it allows you to gain the experience without risking money. Um,
Okay.
Outside of that, it's just easier when you're a brand new operator. uh, that's a lot to go onto your shoulders. It's a lot of anxiety that you would have. It's a lot of moving parts that you've never come across before. So when you have the option of partnering with somebody else, it takes some of that burden off, and you still get to learn, and you still get to go to the next level. It's a lot easier to do a deal if you have someone on your team that's been there before.
Okay. So if you can think back to when you were a beginner investor and you had met the investors that you were able to partner with, can you talk about how were you able to actually build that relationship with them?
With the passive investors,
I mean,
with the
well, how did
passives,
you do it?
or with the operators?
I'm
How
sorry.
how did I develop a relationship with passive investors, or how did I develop a relationship with other co-sponsors,
Well, I guess
operators?
both. Um,
Okay. The way that I did it is we talked a lot about how important it is to kind of put yourself out there. You always got to be telling everybody what you're doing. You should be hosting events live and in person. You should be shaking hands. You should be talking with past investors. You should be hosting a podcast or hosting a YouTube channel, or writing a book or something where people can know who you are. What I did is I host a podcast and I hosted meetup groups. And the third thing that I did is I was very active on social media, always connecting with everybody that I could, always trying to add value or be honest about my limitations and ask questions on social media so that I could grow true relationships, friendships. And so when we ask, how do we start those relationships? How do we meet those people? The easiest way is you've all heard of know, like, and trust. Like, people do business with people that they know, like, and trust. If only 10 people know you, the absolute max amount that could ever like you, the absolute max amount could trust you, the absolute most possible that could ever do business with you is those 10. But if you have a way to get in front of people and start connecting with people, then more people can know you. And if you're telling your story and if you're sharing who you really are, then they're more likely to start liking you and trusting you and doing business with you. So how I did that was thought leadership platform and meetups. But then when I have the opportunity, I just share what I do so that other people can ask me to lunch, or I can ask them to go to lunch. And I talk a little bit about what we offer, and not in a way that's salesy, not in a way that's pushy, not in a way that means my way is the only way, just in a pragmatic, we just kind of sit with them and share with them some pros and cons and why you like it. And if they like it too, they'll be attracted to you. That's how I met most of my passive investors. That's how I got able to be connected with most of the other operators, is through my podcast. One more way to get connected with some passive investors and some operators is by joining a coaching program. So they've got them all over the country. There's a bunch in Texas, Boston, Denver. They're all over California, Florida. There's groups that teach, coach, and mentor multifamily. And when you join a program like that, a lot of times the person who runs the program will help you to be put in touch with more people that need to get their money out passively, and they might even put you in touch with some people that are doing well. They've already accomplished some, and they're open to partnering. So uh, my answers: join a coaching program and you'll be connected with them, most likely automatically. Or take matters into your own hands, host YouTube or podcast, or write a book, and host live events like what you're doing, Rachel. This is a perfect opportunity for you to meet and connect with more people that are crushing it, that are doing it, because you can offer someone like me more exposure, more opportunities to get in front of more people and share my story, while you and I become friends. And you've become one of my favorite people over just the last couple of weeks,
oh,
right?
thank you.
And there's other people on the call that are looking and hoping to invest their money passively, and they're less likely to just invest it with other people on the call. They're more likely to invest it with you, because you're getting the right information, you care about them, and you're doing a good service for a lot of people. So hosting something like this is a great way for the listener to grow into um, being able to solidify those relationships that are so important.
Okay. Well, thank you. Okay, so when it comes to vetting potential, partners, and are there any contracts or an agreements we should know about?
Oh, good question.
Hmm.
When it comes to vetting, are there any contracts or agreements that we need to know about? When it comes to vetting, I I so I first I wasn't prepared for this question, but I have some really good thoughts on it.
Okay.
If you're vetting a potential partner, somebody that you're going to joint venture with, what do you need to look for?
Hmm.
You need to know who they are. You don't get blinded just by what they've done or what you think they've done or what they tell you that they've done or what somebody else told you that they've done. Get to know them on a deep level. When we talk about know, like, and trust, just knowing them is not a good enough reason to partner with them. Just because they're out there, just because they've done a deal or two, just because they have a podcast, just because um, they uh, whatever. If the only thing that you're thinking is, well, I know who they are, so I should just partner with them, you're missing some points. Parts of the vetting are also seeing if you like them. Do I even like this person? Would
Hmm.
I want to be in business with this person? Do I get along with this person? Some people find that out by going to dinner. So, like, out of nowhere, you decide to go to dinner, sit down. Maybe you have your partner and they have their partner, whether it's a spouse or a business partner. But you've got someone with you, they might have someone with them, and you just sit there and try to understand if you even get along. Do you even like them? And do you feel connected with them? Because regardless if they've done everything right and if they've provided money and all of these things, if you don't have the ability to connect with them, there's always going to be a time where the going gets tough. There's always going to be a time where financially something is difficult. And if you don't connect on a deeper level with the person that you're partnering with, somebody's going to be upset. It's either going to be you or it's going to be them, but someone's going to get upset and things go downhill fast.
Hmm.
Other things that you can do to vet besides going to dinner with them, making sure that you like them, is calling references. So this can help you to understand if you really do trust them. You call their references. A lot of people get to this part where, well, they've given me references, so I can trust them. No, you actually have to verify. Trust, but verify. You always verify everything. And on a partner that I almost, on a person that I nearly partnered with, I found out some really bad things. Everything else was good. I even went to dinner with them. I did all of these other things. And I thought for sure I'm going to partner. And then I went to I'm going to call references. I'm going to call other people that have worked with this person. And that's when I was able to talk to 15 people, and 12 of the 15 had nothing but negative things to say. I suggest that to the person listening who's wanting to get into a joint venture, a partnership with their first person. This person had done a lot, over 3,000 doors. They had accomplished a lot. They had given a lot of money out to their passives. They were easy to get along with, very charismatic, approachable. They had a good team, or so I thought. Then, after I called the references, almost all of them had nothing but negative things to say. So that's very, very important. The last thing that I'll say that can benefit you when you're vetting somebody is to actually do a background check.
Hmm.
You can do a background check by hiring a private investigator. That's a possible way, but it costs the most. It's the easiest because you just put it in somebody else's hands. They do all of the digging and they come back with what they find. Or you can do the way that we do it, which is less expensive but important, where we spend about $30 to run a background check online. Now, I don't have the websites queued up right now,
Hmm.
but you're able to go and literally just go to Google or your Yahoo search bar and type in how to do how to do a what is it called? a background check,
Yeah.
and they're going to range from 20 to maybe $60. I recommend you spend anywhere from 30 to $35, and all of a sudden you get a background check comes back to you, sometimes within a day and sometimes it takes a couple days. But if you were going to partner with me, whether you're investing passively with me or whether you want to do a joint venture with me, you should do a background check on me and my business partners, because one of them has the opportunity, and we don't, we're all good, but just FYI, if there's four of us or three partners, you want to do a background check on Adam and DJ and Manny and get to know where have they been, what have they done. And sometimes the background checks can show credit reports. Sometimes the background checks just show criminal reports. But it's important to spend the time to understand who you're doing business with. I was lucky enough that a different experience where I almost was partnering with somebody